So today in our fifth segment of ethics, we will be taking a look at assignment of policy. So the ways in which you can transfer the policy over or use it as collateral, and what are some of the benefits of that. All right, so the first one that we're going to be looking at is absolute assignment. And what does that mean? That means that you're transferring the ownership. So when you give someone an absolute assignment, you no longer own the policy. So you have a new policyholder who has all the rights. Remember, the policyholder is the one that has all of the legal rights, and they're the ones that are going to decide everything within that contract. Why would somebody do that? So let's say a parent purchases a life insurance policy on their child, and now the child is old enough, so they want to transfer that policy over to them so they can do with it what they like, right? So that's an absolute assignment. So they're transferring the full ownership of that policy to them. And what's really important to remember when somebody does absolute assignment is that it resets the beneficiary. What does that mean? So that means that it will reset the beneficiary that the original owner had will fall off. And what happens, let's say if the person doesn't name a beneficiary, many times people say, well, I don't know right now, I'll think about it and get back to you. If no beneficiary is named, this is something important, and I think we forgot to do it when we talked about beneficiary, so make sure you have it. So if there's no beneficiary, then the life insured estate becomes a beneficiary, or the policyholder's estate becomes a beneficiary. All right, so what do we mean? So let's say Kelly had a policy on Tom, on her husband, and she had named their daughter as the beneficiary. And now she wants to give the policy over to Tom so he can do with it what he likes. So she is doing absolute assignment of the policy, so giving the full ownership to Tom. And whatever beneficiary she had is going to fall off. So Tom has to put a new beneficiary. If Tom doesn't put a new beneficiary, automatically it becomes Tom's estate. And when we say estate, that means that that money is going to go to settle any last expenses, any creditors that he had to pay. So it's not really coming into a particular beneficiary, right? So very important to make sure a beneficiary is named. And whenever somebody is doing absolute assignment, whenever they're transferring the policy over to someone else, the new owner chooses their own beneficiary. So very important. And this also may result in a taxable policy gain. So some policies allow gain to be taking place. You're building a reserve. So if you have built a reserve and you have a policy gain, when you transfer that policy over, you may have a taxable policy gain. We'll talk about this later on in the upcoming modules, but I did want to just put that in your mind that it might be tax issues that come up when you transfer, when you give full ownership of the policy from one person to another. Now, the second way that we can sort of transfer or use the policy is a collateral assignment. Now, there's a big difference between collateral assignment and absolute assignment. And the biggest one, of course, is that ownership is not transferred. So whoever the owner is still the owner. You still have all the legal rights to the contract. You still have all the power to make all the decisions. You're only using your policy as collateral. Biggest sort of and most common way that it's used is for loans, right? So you can be using, let's say you have a policy that has a reserve built up, you have a certain base amount, you can go to the bank, you need a loan, and you're using your policy as collateral to get that loan. The person who, if you're adding, for example, a bank, they will usually fall off after that loan is paid. So let's say you picked up a loan for $50,000, you've repaid that loan. So the collateral assignment no longer applies. It just goes back to you being the main owner. All right, so there's the two different ways that we can sort of have the assignment of the policy. Either you can do a full transfer, and the usually common way that we see this is with parents transferring it over to their kids. Maybe they bought the policy when the kids were young, and now they want to transfer it over when they're old enough. Or collateral, which is if you're using it for banks or for getting a loan, and you use a policy to help get a loan. And once that loan is paid off, that assignment does fall off. right? So those are the different ways that you can use the assignment of the policy.